The Bank of Ghana, BOG, has opted to keep the monetary policy rate steady at 30%. According to the Governor of the Central Bank, Dr. Ernest Addison, the decision is aimed at reinforcing the disinflation process within the country. Further details are available in the accompanying report.
After 3 consecutive months of upticks since May 2023, headline inflation reversed course, hitting 40.1%. This started a disinflation process in the country, where in October it hit 35.2%. In its quest to anchor the pace of disinflation in the country, the Monetary Policy Committee of the Bank of Ghana has decided to maintain the policy rate at 30%. Here's the Governor of the Central Bank highlighting the reasons for the policy stay.
Headline inflation has continued to decelerate in the past few months, consistent with forecasts. The latest bank forecast indicates that the disinflation process is expected to continue, supported by the current tight monetary policy stance, relatively stable exchange rates, and base drift effects. All the core measures of inflation and inflation expectations are pointing downwards, and the bank will remain vigilant on risks to the disinflation process. The committee noted that although inflation is decelerating, it remains high relative to target. Therefore, there is a need to keep the policy rate tighter for longer until inflation is firmly anchored on the downward trajectory towards the medium-term target. Given these considerations, the committee decided to maintain the monetary policy rate at 30%. The new unified cash reserve ratio for total deposits, both Citi and foreign currency, are to be held in cedis, and this is being reset to 15%, effective 30th November 2023.
Dr. Addison also highlighted measures the bank is taking to address liquidity challenges in the country.
Unify the currency holding for the cash reserve ratio requirement on foreign currency denominated deposits and domestic currency deposits for banks. The new unified cash reserve ratio for total deposits, both Citi and foreign currency, are to be held in cedis, and this is being reset to 15%, effective 30th November 2023. This measure is to reinforce the bank's liquidity management operations to address excess structural liquidity conditions in the market and provide additional impetus to the disinflation process. The committee will continue to monitor developments in the banking sector and deploy other policy tools as and when required to support stability.